Hello friends, my name is Dr.Bharath. Today's topic 2300 crores down the drain. We have made this video to safeguard the money of retail investors. Usually uninformed investors put money into smaller companies without having adequate risk appetite. Make sure you research and become aware of the background of the company before investing any money. Now and then some companies become bankrupt and their assets gets acquired by other companies. At such times, usually the share price of the bankrupt companies becomes zero. However, retail investors invest in these stocks since their price is always very low and they hoped for revival in the company. For example, this is a newspaper headlines. Retail investors put over rupees 2000 crore in bankrupt firms hoping for revival. Smaller companies popular for bets, keeping retail investors believe there is a possibility of bigger gains from smaller base. For the last so many years, we have been making videos to investors to inform them not to buy those penny shares. As per the report, out of the 75% listed companies which were under the process of bankruptcy, retail investors held 22.9% stake on an average in these companies and HNIs held only 8.71%. Investing in these companies which are under bankruptcy is very risky and hence HNIs who usually have more risk appetite should have invested more. However, the data shows that retail investors had investments worth rupees 2296 crores in such companies. Here are the statistics. Company market cap up to 100 crores, retail shareholding 26.17, HNIs 10.65%. 100 to 500 crores companies 14.29, retail investors HNIs 7.21, more than 500 crores, retail investors 11.43% are held and HNIs are holding 0.56%. For example, Syntex Industries, which is a listed company, has been undergoing bankruptcy proceedings to sell its assets to other companies. Finally, Reliance Industries and another company jointly agreed to pay rupees 3651 crores for Syntex Industries. However, as per the plan, the shareholders of Syntex would not get any money since the money was to be paid to its lenders. This is the graphic description of Syntex Industries 6 months graph, and highest was 1950, lowest was in the range of 5, and this April stock is not trading. As you can see, stock went up from 5 to almost 20 while it was already announced that the company is bankrupt, will be sold off to another company to repay its loans. Finally, it was announced that the stock will stop trading around 3 to 4 days after the announcement. In spite of that, many people kept buying. Today, whoever holds Syntex Industries shares has lost its entire capital. Similarly, the stock price of Diwan Housing Finance Limited, short form DHFL, became worth zero after its assets were sold off. Here is the news item. DHFL shares stop trading on NSE, BSE, existing stocks worth zero now. The reason the shareholders does not usually receive any money for his shares is because the first priority is always to repay the secured creditors. That means banks and financial institutions who have given loans to the company based on some security. Shareholders' investments make profit if company does well and lose money if the company fails. That is why we should always keep track of our investments and monitor them regularly. However, retail investors chase smaller companies which might be low in price but also have many problems. Finally, when the company closes down, they lose their money and blame the stock market. Finally, at the end of this video, we have a question for our survey. Have you invested any money in companies which have closed down or become bankrupt? The answer could be yes or no. Type it in the chat box. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, and make sure that you like the video. Plus, send this video to all your friends so that in the future they may not invest in any penny stocks. Thank you for watching the whole video. Bye bye. All the best.